Hello everybody, welcome back. As per usual, every single month I will be updating you guys to the portfolio. I'll be sharing my new buys, sells, dividends for the month, and so much more. And this month has been an absolute roller coaster. Personally, I think it's fun, but it's not so fun seeing my portfolio down $1,000 from all-time highs. So today I'll be sharing my buys, sells, dividends, portfolio allocation, statistics, and so much more. Alright, on to the video.
Hello, I like money.
Alright, at the start of March at least, the portfolio was sitting at $34,400. Right now it's sitting at around $900 less than that, so I don't want to talk about that. Right now, though, our portfolio currently has a 16.59% annualized rate of return, which is above the historical 12% for the S&P 500, but as of recently, the S&P's had a 22% rate of return, so I'm not really completely beating myself up over it. I don't think it's crazy bad performance compared to the S&P. Obviously, only 3 or 4 years is not a crazy long enough time horizon to be beating myself over. Currently have around a 12% cash balance, which is in ESCA, which is earning interest. I trimmed some of that today, but that's where it's been around the entire month. Happy where that's at, and I also do want to mention that I have a position or two this month still that if shit were to completely hit the fan, a lot worse than it is right now, that I'm willing to sell out of. I'm kind of viewing those as cash positions. Those two holdings are Starbucks and Union Pacific. Union Pacific is just a bit of a conservative holding in my portfolio, but if something were to completely hit the fan, there's better opportunities. I'm willing to sell out of that. And Starbucks, I'm going to be getting to that when I talk about my buys and sells, because that's been a big one that I've trimmed this month. Always fun to go over portfolio allocation. Currently, 67% of my portfolio is in U.S. large cap, so most of it. I have 11% of the portfolio in U.S. small cap, 10% basically in SGov, which is cash. That's been ranging from 10 to 12%. International, which is also small to medium cap stocks, around 9%. So currently, about 20% of my portfolio is in small to medium caps, which I'm very happy with. I'm happy where the allocation's at in the portfolio. There's nothing I really want to change drastically bad. I'm always trying to keep cash, though. Honestly, one of the more boring months when it comes to dividends. I literally only had 2 companies their positions even pay out. One was Starbucks, which was my last ever biggest dividend from Starbucks at $13.49. It says quality dividend reinvest, but I pretty much sold after. Then I also got $11 from SGov. For the total of the month, I still got a nice $25.12. You could buy a lot of things with $25. 12 Cash Flow Kings channel memberships, and a partridge in a pear tree. And here, of course, you could see my dividends over time since 2022, and you're going to see it gradually being more consistent as I've really established my core holdings going forward. May is going to be a very, very fun month because Evolution Gaming is going to be paying their annual dividend, and the graph is just going to absolutely spike up. I'm set to get like $50 from them, so I'm gassed for that. Alright, on to the topic of the video, and I would say it's been the most active month in the history of the portfolio. To recap it briefly, when it comes to the ETFs, it can get kind of boring. I bought 29 total shares of SHG and 4 shares of SHD. Obviously, I've explained before the ratio and kind of reasoning with SHG and SHD. 25% of the portfolio SHG, 10% SHD. That's the target allocation. But yeah, at the beginning of the month, right after earnings, I put $225 into Uber. That turned out very good, very fast. Uber's kind of trickled back down to where I'm considering adding even more and making it a bit of a core holding. It's around like 4 or 5% of the portfolio right now. You'll see once I pull up the data on FinChat. But that turned out very quick, and I timed that perfectly. But once again, I didn't anticipate to time it as great as I did. Then I sold 1 share of McDonald's at a 30% gain, $288. I think there's better opportunity. Indexed that. I started the selling of Starbucks at a 33% gain. I made a video on that. I just think that there's a lot better options than Starbucks right now. I think it's more of a gamble than an actual investment when you could just get a 12% return indexing. I think that China's a big bet with them right now. I think their CEO is good, but there's not been any fundamental growth of the business. And if the stock is going to be trading at the valuation that it's at right now, I'd like to see some fundamental growth. There's none there, and that's why I've been selling out of Starbucks. This month, spoiler alert, but I sold around half of my Starbucks holding, and once again, I mentioned that I'm kind of viewing that as a cash position right now. Seeing some nice gains on that, though, so I indexed that. I fully got out of McDonald's then again at a 26% gain at $296. McDonald's, thank you for your service. I'm sorry to Dan Weston. With that money, I bought some shares of High Tide. I bought roughly 115 shares from the price ranges of $2.62 to $2.85, and I've continued buying down to where it's at around today. Very volatile, once again, I mentioned. This is a small cap stock, a lot of retail participants in it. Just be ready to eat volatility, but it's kind of inverse to the market, which is a nice thing. Then you see a continued repeated theme here of me selling one share of Starbucks and just indexing that. That's just been kind of a recurring theme here this month. The market was just giving me good opportunities. Like if the index was down 1 or 2% for the day, Starbucks was up. I'm gonna make that swap every day. Then I fully sold out a Target after being convinced at a 14% loss, and it's ironic because I probably lost more money already on that. With that, though, I put that into 45 shares of High Tide, $500 of that into Amazon at $224. That's turned out really good for me so far. Indexed it, and I also added to my Disney position at $109. Target, I just basically had to cut your losses kind of there. Even if it went up another 15%, I'd only be coming out flat. So why not put that into some stocks that over the long term I think can easily make up for that loss. I made a video on it, but I admit my loss with Target, it was just probably got a little too petty at some point with it, and I think that there's just better opportunities, man. I'll be honest with you. Continued buying some more High Tide, added 40 shares. Once again, made another swap, Starbucks for SHG. Then I sold out a big part of my Starbucks at a 33% gain, 6 shares at $113. Put more money into Amazon, SHG, High Tide, and then I've continued buying this Amazon dip, even going into March here. Put $95 into it at $206. Sold 2 more shares of Starbucks at a 38% gain. Put it into SHG. Put $50 more into Amazon at $208, and then I sold 1 more share of Starbucks at a 42% gain. So it's been a very reoccurring kind of theme this month of just selling out of Starbucks, putting it into Amazon, High Tide, and SHG. That's basically the month summed up for me. You could see here, but I'm really trying to make Amazon a bit of a core holding in the portfolio, and I think now is an amazing time to add to it. If it ever got back to like 180, 170, 160s again, I would probably go 15 to 20% in it. I'd go pretty heavily allocation-wise. And I'm pretty heavy right now, but the stock just keeps going down, so the market value and the overall value in the portfolio keeps going down. But yeah, I'm very highly convicted into Amazon and SHG, and right now I'm pretty much flat in the SHG position because I've been just averaging over like the last year and a half, so obviously not doing too great there, but over the long term I'll be fine. Amazon's a powerhouse, and if there's going to be any AI bubble, I think they're going to be least affected by it. Alright, this is the current allocation as of the beginning of March. Currently, 16% of the portfolio is in SCG. I like that a lot. Visa is 12.3%. Visa's been going down a little bit recently, so I think if they got back to near like 320, 310, I'd start loading the boat more just because I'm really convicted in that business model. It's just so strong. It's a powerhouse. And, when it got to like 360, I regretted not buying more. 11% of the portfolio in cash. SHD is around 10%. I'm happy where that's at. I'm not going to be aggressively buying anymore. It's also going to be a nice little hedge if, growth keeps going down. Vici, which has been doing nice recently too, 9.2% of the portfolio. They're going to be paying out a fat dividend in April, and I'm looking forward to it. Amazon is now the 5th largest holding in the portfolio at 7.7%. Very happy where Amazon's at. I'm happy to be adding more. Looking to get that near 10%, 10 to 15%. I'd be very happy. Microsoft at 7%. Considering adding more Microsoft, I got to do more due diligence and research on the valuation right now. I just think Amazon's the better opportunity, and I've also been indexing to SHG. Then 5% of the portfolio is in Disney. I think Disney's kind of a sleeper holding, another potential defensive play in the portfolio. And maybe I'm continuing to look at add here, but I'm happy where it's at allocation-wise. Dips below 105, probably going to be adding a tiny bit. High Tide currently makes up 4.9% of the portfolio, and that's even with it being beat down like 25% in the last month. A big part of that's just going to be basically if they've been doing good as of recently, like performance-wise. But you got to do the due diligence and rational here. I'm happy where my High Tide position's at. High Tide's nice because like when it sees gains, I can actually see it in the portfolio, and you're seeing it right now. But like if it went up another 10, 20%, like my portfolio will be reflected on that, and I really like that with High Tide. So I'm happy where that weighting's at right now. Uber 4.1%. I'd like to make that around 7% sometime if I can keep buying, maybe in the low 70s, high 60s. I'd be very, very satisfied. Then Starbucks is kind of sad to see, but 3.8% of the portfolio. I've just been continuously trimming. Uh, I kind of explained earlier. Evolution Gaming, only about 3%. If they get like below 73, 72, I'm probably going to buy more. Union Pacific, once again, I'm treating that as a cash position, 2.6%. TKO, which has been down recently, 2.2% of the portfolio. I got to do more research on the valuation of that, but I really like that business. And no, John Cena turning heel does not hurt the stock at all. And then, of course, British American Tobacco, 1.5% of the portfolio. Looking at some of the nice statistics on the portfolio on FinChat, once again, use a Cashflow Kings affiliate link in the description and a pinned comment. 20% of the portfolio is in financial services right now. 14% of the portfolio is in REITs. 12% of the portfolio is in broadline retail. 11% in entertainment. 11% in software. 10% in ground transportation. 10.5% in hotels, restaurants, and leisure, 7.7% in pharma, which I think is high tide, and then 2.3% in tobacco, and I don't think this counts all of the SHG and SHG too. Overall, though, very happy where the portfolio is at. I think it's pretty diverse. I'm really bullish on the financial services aspect of it, though. Currently, my portfolio has a forward PE of 29, net profit margin of 32.2%, an EBITDA margin of 46%, and a return on equity margin of 19.2%. My companies have a 14.6% return on invested capital and an operating margin of 41%. Overall, I just look for solid businesses that are really profitable, have a quality business model, and are hard to compete with. That's all it really comes down to at the end of the day. And of course, valuation matters as well. You want to make sure that you're getting them at a reasonable price, or some of these even
deeply discounted.
All right, appreciate you all once again for every month tuning in on the portfolio updates. Let me know your thoughts on the portfolio's current state in the comments section below. Smash like button, subscribe to Dividend, Stocks on Drugs, and have a good one.